and freaking stuff.
All right, nice. Thank you. I want to go over to my main man up there in where is he at today? I don't know, up in the northeast, our ex stock picker, the legendary one and only Jack Pitts. How in the hell are you, buddy?
Oh, hey, Gavin, how are you doing?
Out living the dream here. We're just
I don't know.
coping. So just what's new and exciting, my man? Talk to me. John, Jack Pitts.
I don't hear your audio, Jack. But I didn't. I messaged him in the back channel and just asked him to come in when we were talking about the bear market stuff that Matt was talking about and the price suppression. Jack did a interview with Anil and Todd on their podcast, and he was just amazing at explaining how they're able to manipulate the market so bad. So it looks like he just dropped down, but when he comes back up, I'd love to hear his explanation of that, the price suppression stuff.
Yeah, send him a request to speak, and we'll have him come up when he gets free. So, who's that? Who's
We
that?
hear you now,
Unmuted?
Jack.
Okay, we hear you now, Jack.
Oh, yeah, sorry for the disruption. I guess I had a bad connection for a second there. I just actually have a question. If anybody, I heard Gavin, you mentioned enterprise adoption, um, and I was curious if anybody knew of anyone or anything that's been contracting to use BSV or is already using it. There's been a lot of transactional volatility, I would say, in 2025. It looked like the beginning of the year was pretty low, if not like at 5-year lows. And then I think probably due to testing, mainly there's a lot of transactions starting in, I don't know, September and onwards. And then it's been kind of all over the place. So it looks like there's some activity out there, but I'm not really hearing anything from any enterprise adoption. So if anybody knows anything, I'd love to hear about that.
Last week, Siggy was on the stage, and he was going through a lot of the companies their work. Well, I don't think if he named the companies, but he definitely talked about the. I mean, he really kind of went through. He seemed very enthusiastic about the companies that were beginning to use or adopt. Uh, he had pretty good personal knowledge about it. But those are hopium things, and I don't want to tell people, oh, hopium, it's going to happen. I think it all comes down to us. What can we do about it? So what can we do? And we just gotta, it starts with a little garage band, man. That's right. Like I think, like Jack, you've talked about, it really does. Start small. That's what we can do.
Oh, totally. I mean, I think that's the right way to look at it. And there are some great apps out there already that I really like. But I just heard somebody mention it on the several times. But I don't know who Sydney is, but I was kind of curious as to what kinds of companies they might be and what they're doing or anything really.
Well, he's the guy who's in charge of Teranode. He's the one overseeing all of Teranode, the whole project. And so he really kind of broke down in detail last Sunday, the the groups he's working with, and like he was. I don't know if he gave actual company names, but they're definitely uh, making some major waves in the background. That's what he claimed. So they're not just building Teranode for no reason. It's basically he's definitely. Go ahead, Brandon.
Yeah, so I got some insight from our backend developer, and we've been working on Bitcoin infrastructure for years. So it hasn't always been as easy as it is now. But effectively, when we inherited the Bitcoin core software, we actually had a lot of legacy stuff that was put in over time, like little grains of sand. A couple of those things. One was the mempool, and one was remove by fee. And what these two things do is they act as bottlenecks for transaction finality. And they make uncertainty within, basically, when you're communicating with a miner, it creates uncertainty on whether or not your transaction is going to go through. So when you don't have instant transaction finality, when you communicate with a miner, it builds a bottleneck, and then sometimes you can get double spends, or you can get basically orphan transactions, and it creates a huge mess. Basically, Teranode is like the final step to remove these bottlenecks. Once you remove the bottlenecks, then your capacity increases like tenfold or more. So Teranode's a huge deal.
Wow.
When you said remove by fee, you mean replace by fee?
Yeah, replace by fee.
Gotcha. A quick comment on the pricing stuff. It depends on what you consider Bitcoin. If you consider Bitcoin a security, securities have income or earnings. So a security would be like a stock. So if we use the real extreme example, if you bought a stock for $1 and they were going to pay $1 every quarter in a dividend, well, that'd be a pretty easy stock to buy, as long as you believe that the company's going to continue to make money, because you'd earn your money back in 3 months. And then the next 3 months, you would make 100% of your money. And then you would make 400% by the end of the year, and then you'd make 800% after 2 years. And so anything that can earn money, the real world, when I talk about the real world, I mean like the butcher, the baker, and the candlestick maker. They don't talk in terms of like what rate they're earning. They don't talk in Wall Street terms. They talk in how fast it takes to get your money back. So, you buy this building and you're going to charge rent, and the rent's, got a cap rate of 10 or something, but they don't even really need to think about that. They just say, oh, in 10 years, I got my money back. Or, an amazing investment would be, I bought some carnival, and, in 1 year, I'm going to get my money back. And then after that, it's all gravy. Well, it's the same thing in any security. If you buy a treasury bill, that's a security. It's a bond. Any bonds have interest rates attached to them. Even your bank account has an interest rate. So all these kind of security type things are relatively easy to value. It's just based on the income that they produce while you hold them. Now, if you buy a stock that doesn't make money, you're kind of betting that someday it will make money. So, there's plenty of those out there, especially in the tech world, because they've been able to get away with not earning money for the last 5 decades or so. But if you're talking about Bitcoin as a commodity, well, then there is no direct income from commodities, in terms of it doesn't pay a dividend, it doesn't pay an interest rate. So when you value a commodity, it's literally based on the market value of what people buy the commodity for. So if it's crude oil, then you're buying it to turn it into gasoline, which then you can sell for a profit. If it's pork bellies, then you're buying it because you're a bacon processing plant and you're going to, sell bacon. Same thing with all the commodities. So those are based on usage, and people eat pork bellies and they burn oil, and those things are important for living life. So the question you have to ask yourself is, what is Bitcoin important for? Because if it's a commodity, then it's priced fundamentally on what people need it for, and how much would you pay for that commodity based on supply and demand, and typically what it costs to get something out of the ground or processed into the commodity. So if it's gold, you have to mine it, you have to remove all the rock, you got to melt it down, you got to turn it into bars or coins, and then it's the commodity. For oil, luckily it's not super hard because it comes out of the ground almost commoditized, depending on where you are. But you still have to deliver it. I mean, crude oil, you have to deliver it to Cushing, Texas, and you have to deliver it in a number of barrels. So it's divided up into measurable units, and it has a certain quality that it has to meet, and it has to be at a destination at a certain time. So that's the commoditization of oil. So if Bitcoin is a commodity, then it has to be priced on the utility. So sure, it can have a speculative value, which is what we've had for pretty much Bitcoin's entire history. But Bitcoin can have a fundamental value based on its utility, but we kind of have to start using up the coins. And so either you can talk about speculation, which is HODL, in which case BSV is no different than BTC right now. It's just got a much lower price. So if BSV is to overcome or flipping anything, which I think is the title of this thing, it has to overcome it by selling the commodity for people that are using it. And everybody in BSV, especially the higher ups who have some money to spend and stuff, they've always said that, and that's the proper way to phrase it. It's that you have to pay attention to the utility side of the business. So that's why I ask about things like enterprises using it or garage bands, or I ask people what their favorite product is. Because if you don't have a favorite product on BSV, if you're not like making bets on a little bit every day, or you know, or writing definitions on Slictionary, or whatever you think your favorite app is, then you're not really participating in the ecosystem in any way. So you don't have to be technical, but you do need to kind of find the aspects of Bitcoin that make it the commodity important, such as the security aspect, or the fact that it holds data, or some other part of the utility of it other than the money part, because the money part's secondary. That's what comes later when it has the utility, right? Nobody used gold and silver as money until like kings and queens wanted to make crowns out of it, and physicists want to make circuits out of it. So you have to have some kind of use for the thing. So we can talk about technicals and speculation all we want, and those are great things. And if you're all about speculation, there's nothing wrong with that. But then you should be cheering for things like Satoshi emerging and everybody recognizing it, or the end of, say, the rigging of crypto prices by offshore exchanges that don't have any rules. But if you really want BSV's price to stop going down, you have to use it. So it's fundamentally that is the one way to stop it that no one can really stop. Even the manipulation of the price will end if people are like, man, I need to get me some Satoshis, because otherwise I can't create ownable definitions in the dictionary, or I can't create chats that make money on one of the many social networks that have happened in Bitcoin. So that's why I keep asking these questions, because I can do my own thing and you can do yours, but if you're not technical, you need to use BSV, or if you're not technical, you need to invest in BSV startups. Otherwise, you just there's really no different than BTC.
Nice. Okay, Jack, let me go to Brandon and then I'll go to Rodolfo. Brandon, you're up.
Yeah, I was just wondering what Jack Pitts thought about stablecoins being that killer use case, because we have the Genius Act now. It seems like stablecoins, they're trying to push that as like the future. So in my mind, stablecoins are kind of like the killer use case. And one thing that's unique about BSV is that fees are so cheap that wallets like Handcash, for example, we can afford to support MNEE with zero gas. So people can deposit dollars into a wallet, not even need to get a secondary coin. I feel like that's like very unique to BSV.
Yeah, I agree with you. I think that stable coins could be a great use of Bitcoin. I would say there's kind of two aspects to that. One is to put your like Steve Jobs hat on. He believed in these things called skeuomorphs, which is if he could see the future 10 or 20 years in advance, he recognized that humans couldn't, and that they needed steps to get there. So like I remember he designed a bookstore for iPhone, and he made the books look like they sat on shelves, and the shelves looked wooden, right? He kind of made the product look like something that an old person would recognize as reading a book. And when you flip the page, you kind of have to rub it, not with a wet finger on your iPhone like you would have to read a real book. But this is the word skeuomorph kind of extends from that, where he recognized you need to get from A to B. Sometimes you have to put in something in between A and B. And I think the stable coins are sort of like that. Like BSV could be money, And as it becomes money, it would become more stable and the price wouldn't change as much. And that would be great, but maybe stable coins are the skew more for people to kind of get there, because people today, they don't understand the definition of money and they're probably not really interested. They just want it to be maybe kind of stable a little bit. Or they just want something recognizable, which is the dollar. And, if the dollar flipped off the table, Weimar Germany style, then I suppose people wouldn't care so much that BSV was volatile. They would just want to get anything that wasn't going down every day, like the purchasing power of the dollar. So I think stable coins are a very interesting use case. However, it depends on how you do them. And even if you do them perfectly, where like my idea for a stable coin would be you would have 100 Satoshis would equal, like a stable coin, would be like a Bitcoin dollar, so to speak. And you would, instead of trading something that says $20 on it, but really is sitting on one Satoshi, you could trade something that says $1 on it and trades at 100 Satoshis per coin. And then you could melt it down, right? So then it would be very similar to the silver dollar that the United States is founded on. No matter what happened, if you had $1 in your pocket, they could say that the dollar's worth more or less, but you always knew that you had a piece of silver in your pocket that could be melted down, turned into jewelry, whatever you want to do with it. And that way, the people have the power. So if someone tries to mess with the stable coin and it's able to be melted down into 100 Satoshis, well, then the government can never really cheat you. They can maybe let the thing be worth more than the 100 Satoshis, but they can never let it be worth less, because they could have a stipulation where you could melt it down into the 100 Satoshis, and maybe BSV is worth more than the dollar or the stablecoin dollar. And that would be the right way to do it. And I think that will be the eventual way it will happen. But probably initially, governments aren't going to go for that because they always want the ability to print money. And so does, by the way, the private companies like Tether, and anybody else, USDC, they all want the ability to print money. And I think you can call them evil, I guess, but the evil forces of governments, nations, and private individuals that want to own the money supply, they're not going to really go for the meltdown factor. They're going to skew more from fiat into some, frankly, shitcoin sort of stable coin that has rules attached to it. And the rules might be, well, the government gets to decide whether you can melt down the Satoshis or not, or we just put it on one Satoshi and then the meltdown value really isn't worth much anyway. And so you're still owning kind of a piece of junk that's faith-based rather than commodity-based. So that's a big topic, I think. But the bottom line is, yeah, man, like, let's get some stable coins on there, because literally anything that takes up space of the 2.1 quadrillion Satoshis or the 21 million Bitcoin, however you want to phrase that, if it takes up space, then it adds to the fundamental value of the commodity, and then the price really would go up. And frankly, we're all not allowed to talk about price for some reason in BSV, but it's ridiculous because, you watch, if you read the history of oil, for instance, you'd know that every boom in the capitalization and the investment of the oil industry came when the prices were high, right? When the prices are high, then you need to get it out of the ground. So there's all this investment to do that. And it's the same thing in BSV. If the price goes up, financiers start buzzing around and companies start getting funded, and products, go from kind of rogue and garage band style, and they get improved. And when products get improved, more people come, and it kind of creates a chain link effect, or like a domino effect, where price goes up, everything starts working. So I think price go up is a good thing. It's just that it's become clear that it's never really going to happen via speculation, because there's just too much money behind the rivals and the enemies of Bitcoin that don't want it to happen, that they've been successful for, I don't know, what's 2009 minus 2025, it's been 16 years, and real Bitcoin's trading at $20, which, takes you back to what, 2010, 2011, 2012, somewhere around there. So it's pretty obvious that the speculative forces have not really worked. outside of manipulation, which would explain BTC's price and all the other cryptos. But I think fundamentally, yeah, anything, literally anything would be great, even if it's stable coins.
Nice. Okay, over to you, Rodolfo. What's up, buddy? You had your hand up too. Rodolfo. All right. Come back when you're ready. Yeah, that was good, Jack. I mean, I appreciate you chiming in on that. It sounds like it's ultimately it comes down to utility, versus speculation. So it's you know, if there's any other comments or questions, let's see. I see Daniel's up. Daniel, if you want to jump in, I know Daniel, you're in Melbourne, so it might be too early for you. But if you want to jump up on stage, I'll be happy to add you. Give your 2 cents, from Melbourne. What's up, dude? Good to see you. And so, anybody else want to jump in? Feel free to. Rodolfo, you're up. Okay, Rodolfo, you're gonna have to jump back down and come back up. Your mic is no good. So come on back up when your mic is fixed. We cannot hear you. Sometimes if you're on a mobile, it doesn't connect right. So, Casey.
Hello. I just was listening to Jack, and I mean, my wheels are always spinning on how we can get that first utility going. And I'm sure there's a lot of stuff going on in the background at the higher levels of the BSVA and stuff of, bigger enterprises that are testing stuff out. But I know everybody's under NDAs and all that type of stuff on really disclosing any of that. But what are your thoughts on the fastest positive feedback loops between the, price and further investments?
Yeah, the fastest feedback, in my opinion, is going to come from where we're. I mean, if Daniel wants to come up and talk and make announcements, he can, because I mean, people are going to we're going to see some major things happening with.
I messaged him in DM and said, "Come on, give us some updates." I know he's got a lot of momentum there with Lamint and some huge creators that would.
Yeah, well, the rails with hand cash coming up with the payment rails sounds like Brand's doing a lot with that in the payment rails. That's really been it's going to make a big breakthrough as soon as that we have payment rails increasing and improving on things. It's gonna it is massive. Like that's that's been a huge thing that's got to be overcome or is being overcome. So,
hey Daniel, thanks for joining us.
Hey, how you going?
Daniel Street, how the hell are you up there in Melbourne Monday morning?
Going well. Starting the week.
Monday morning already. I'm still partying in San Francisco on a Sunday afternoon. It's only noon here, so.
Very good. Going well. We're actually starting to onboard content creators this week, which is exciting.
Oh, okay. So you guys are starting to onboard content creators now?
Starting to onboard content creators, yeah. So that'll be like essentially within the BSV space and within the cryptocurrency space. But yeah, it's exciting. We're moving forward with everything.
Wow. So what about the payment rails?
The payment rails, like within cryptocurrency, they're fundamentally broken. So if you use a platform such as OnRamper, which is the main platform for cryptocurrency on-ramps and off-ramps, like 60%, 50% of the payments are flagged by the banks. So they're still being flagged by Australian banks, by American banks. And that's a huge issue within the cryptocurrency space that I don't see them solving yet, because it's being flagged predominantly by Visa and Mastercard. So they know exactly what's happening in terms of not allowing people to seamlessly buy, whether it be Bitcoin, stable coins, or any other cryptocurrency. So we're just going to we'll just have the regular pay-ins in terms of you'll be able to send BSV to your handcash address. But it's predominantly going to be for cryptocurrency users in its current form. But so what we're planning to do after this is introduce fiat to the platform as well. So we're going to have traditional pay-ins and payouts using fiat in combination with cryptocurrency. So then that way, your everyday content creators and fans can use the platform, but then you're going to have that aspect of cryptocurrency / BSV as well.
Okay. Nice. And so everybody, it will be done through, and how does the micropayments and all that work for something like this?
So you can still do the micropayments on traditional rails, like on traditional fiat, you can still do it. So you essentially build an internal ledger, and then at the end of the week, you consolidate that ledger and reconcile it, and then pay all the creators once a week. Now, what makes Bitcoin work so well is this ledger essentially is the blockchain, and all the payments are reconciled instantaneously. Whereas most companies that have the micropayment element, like particularly the, like say the casinos, some of the online gaming spaces, the payments are normally reconciled once a week. So you've just got more of that accounting part to it with the business if you do the internal ledger on fiat. But look, it's something we need to do because currently the on-ramps are just, they're not working. They're broken within the cryptocurrency space.
They're not ready yet, clearly. So that's on all platforms, pretty much. Yeah.
It's everywhere. Like, I don't know if you guys have tested it, or many people have tested it on, using Change Jelly, using on-ramp of the platform. Like if you try to top up, say 10 times, 15 times, you'll constantly get flagged by your banks, which is unfortunate.
Right. Yeah,
This is going to get fixed once, Brandon, what you were talking about with the onboarding with hand cash, right? Won't that make platforms like Lamint much easier to get on and get started and earning right away?
Yeah, I think the problems Daniel's describing is still affecting companies like Banksa. I think Banksa is a little bit better than most, but I think, particularly in Australia, they seem to be a little bit more aggressive with the flagging. So if it's up to the banks. If the banks are like saying we don't want people to buy crypto, then the banks might block it. But I think it really just matters where you are in the world and what your banks are doing.
Yeah. Because for us, it's fundamental that the ramps are working every single time, because we're essentially opening this up to content creators, and if they're inviting their fan base, and say only 80% of their fan base can get onto the platform and top up, it still doesn't work as seamless as some fiat creator platforms. So essentially it needs to work 100% of the time. So during our testing, essentially for the last almost 12 months with ramps, we also found that the payments were not only being flagged by the banks, but the banks were suspending accounts, like suspending people's cards, to the point where they would have to call up the bank and get their card unsuspended because they were essentially buying, say, cryptocurrency, and the banks would totally flag it and suspend the account. That's the biggest. That seems to be the biggest hurdle at the moment within the space, because I think as soon as you have seamless ramps, then it's all just about the creator economy. Like that's how you kickstart all of this.
I was at the conference, the London Blockchain conference, and I was doing a bunch of stuff. And then the CoinGeek team, they pulled me aside. They're like, "Oh, can you do a quick 2-minute, show with Kurt?" And I'm like, I ran over there, right? And I come up there, and I haven't seen it come out yet, but he's like, he does this impromptu, puts me on the spot question. So what's how's this what's gonna be the big app or whatever? What's gonna be the big thing, that's gonna blow this industry up? And I'm like, dude, the creator economy, like. The creator economy is going to freaking blow this whole thing up. I mean, it's going to happen. There are missing elements. I mean, I'm not, how it all fits together, right? The ramps being obviously the big one. I think that it's going to work. I mean, eventually the ramps are going to get figured out. We have the laws right in the U.S. with the Genius Act. We have the laws correct. There's no reason the bank should be flagging stablecoin transactions, but obviously it's still not there. So yeah, it's going to happen. The creator economy is going to explode this thing, but. There's just like a couple more loose ends to tie up. Seems like.
Yeah, I think the biggest, like the best solution that we can introduce, like as like within BSV, is something similar to what Friendtech did. I'm not sure if you guys remember Friendtech from I think it's 3 years ago, 3.5 years ago. They were on Ethereum, and they introduced a token that every creator could sell to their fan base. But when you purchase this token, you got access to send the creators a DM. That was it. Whereas now, what you can essentially do on Bitcoin is, if you allow every single creator to create a token, say you have 10,000 of these tokens per creator, and then fans buy the token, and then by holding that token, you earn a percentage of what the creator generates. And that can be done on BSV, right? Because you can break it down into 1/1000th of the percentage of what the creator earns from every transaction. And then if you then sell these tokens on a secondary market within the application itself, then you get the speculation as well. Because say Mr. Beast wants to bring out his token, and then that token's earning the holders a lot of money because Mr. Beast is generating a lot of revenue, then that token will be worth a lot more money on the secondary market. Like, I think that's the best way to kickstart all of this. Yeah, if we can raise the capital, we'll do that ourselves as well, because that seems to be the best way to do it, and it can only be done on BSV.
Nice. Okay, Rodolfo, you're up, buddy. You just joined us back. So can you unmute? No. All right. Well, we don't hear you, buddy. So we'll come back to you when your mic's cleared. So, but yeah, Daniel, the tokenization model is definitely, a huge missing element. I know Bose has talked a lot about that and like specializing in that. I mean, I don't know, how can we do that and not get in the way of the securities issues?
Exactly. So that's the problem, right? It's the securities issue. But then it's similar to what Friendtech did. They brought it out and went viral, and then after that, then they updated their business model. It's the old thing of, it's easier to ask for forgiveness than permission.
Dude, let's 100%. I'm so glad to hear that. Like, let's just go ahead and I agree, man. I agree. Right now, the last thing the SEC's got to worry about right now, in my opinion.
Exactly.
I mean, dude, SEC's got freaking big fish to go after. I mean, they've got massive fraud happening. I mean, so it's in the crypto industry, and it's not little old BSV. That's
yeah, exactly. Because if you can have 500 fans or 1,000 fans holding a creator's token, and then you're getting paid, well, essentially that creator is paying 1,000 fans at once with every transaction. Like, that's I can't see it be done any other way other than some kind of viral app within the creator space, because the creators are the ones on the internet that make the most money. So that it just makes sense.
Yeah, let's go to Bose. He just joined us. I know he's been really talking about this for a long time. So Bose, what's up, buddy? Good to see you.
Hey, thanks. I just thought I'd comment on the dividends model that Daniel's talking about, because it seems to me that if a creator can inflate their token after they've sold some of their future dividends to their fans, then obviously that's a regulated security. But Daniel, is it correct that you lock your creators' tokens? Do you lock them in multi-sig? Like, when somebody buys their tokens from a creator, they have an account on Lamint, right? So surely you can keep all of that from trading on a secondary market. You can keep the secondary market internal.
Sorry, yeah. When I say secondary market, I mean within Lamint itself. So there'll be marketplace within Lamint. You won't be able to send the payment. You won't be able to send the tokens outside of the platform.
Right, exactly. So and does that mean that you KYC all of your fans and users and creators, or do you only need to KYC the creators?
You would only KYC the creators. Yeah.
Okay. So if I'm a user and I buy a bunch of your creator tokens, then I've got an account on the website that keeps track of my tokens. And do I get paid in stablecoin dividends?
Well, it's a good one, to be honest, because now that I think about it more and more, with the fan side, if the fans are earning, in particular if they're earning dividends, you would need some kind of KYC. So I haven't thought too much about the structure of it, but that makes more sense. If you are to participate in the marketplace, you would have to do KYC as a fan because you're earning on the platform.
Jack?
Daniel, I have a question. Like, if we've had like a Lamint account from 2 years ago, say, or when you were in your early days, do we still have an account? Because I feel like there was a period, like maybe a year and a half ago or something, where you were transitioning or something. Maybe like tell us that story if you can. That'd be really cool. It sounds like whatever you found elsewhere, it didn't quite meet the criteria you were looking for, which I think would make a great story for us if you have something like that.
Yeah. So we originally were on Handcash, and then we integrated the Handcash wallet as a service, which is essentially just a Handcash wallet within Lamint itself. But then we realized that there was more, but we thought there was more outside the BSV space, like in terms of proper ramps and proper stable coins as well. But it wasn't until we tested more and more of the ramps that we realized the ramps were fundamentally broken within the cryptocurrency space. Like, regardless of whether or not they sold BSV on these ramps, all the other coins that they sold on the ramps, like USDC, that was still being flagged by the banks, because we wanted to actually pivot to Solana. That was the idea, because the ramps were selling USDC on Solana. Solana was doing the micropayments as well. But then only recently, over the past 2 months, where we found out the ramps were just broken within the entire space, we decided to then come back to BSV. So all the wallets you created, say 2 years ago on Handcash, they will now work again on Lamint. So if you log in, Jack, to your old account, you'll have access to your wallet. It essentially just connects your existing Handcash wallet to your old Lamint username. So
that's great news. So our content from then, is that still around, or is that?
It'll be still there, but you'll need to apply to be a content creator. So we've just integrated KYC, which was a requirement for us. So we've integrated KYC. So in order to start posting on the platform again, you'll need to undertake KYC.
Gotcha.
Yeah, but we essentially went full circle, right? We went from BSV to thinking there was something better outside of BSV, because all these other ramps supported USDC on Solana. So we went over to Solana, but then realized that was broken as well. So we're back. And it's nice to be back, to be honest.
What seems to be wrong with Solana?
And more particularly, what was the name of? There was like a ramping service that you were interested in, and I remember you were kind of asking for money, MNEE, to kind of get on that, or vice versa, or something. But has their business tanked? This on ramping service that I remember you said that they had sort of figured out a way to finagle their way through the banking system to get it all done, but you know how that is. Like, I know that sometimes that changes monthly or whatever. So is that what happened, or do you know the background to that?
Yeah, that was a company called CoinFlow. What was it?
Was it CoinFlow?
CoinFlow. Yeah. So yeah, CoinFlow had figured it out in that they were able to classify some of the on-ramping payments as, I think it's MCC 5815 digital goods, Whereas it turned out that those digital good payments had to be one-for-one payments. So it was like buying an NFT, right? Where you could buy one NFT and it would cost, say, $2. And then you could make the payment and the fee would be, say, 30 cents, 40 cents. And then you would receive the NFT. And if it was done that way, then the banks would classify it as MCC 5815. However, if you wanted to top up your account with cryptocurrency, then the banks would always classify those payments under MCC 6414.
There's no way that didn't happen via MasterCard and Visa influence.
Oh, exactly. So they know exactly what they're doing. And we only realized that through more and more of this testing. So like, there's no way this will be adopted if the ramps aren't working, because we came up with the seamless solution in terms of the partners that we had. We're like, this is going to work great. If people can buy BSV, like, this is going to take off. But they couldn't, unfortunately. So now we just do the hybrid model. We do the BSV model along with traditional fiat ramps, which work seamlessly. And we do our best with that. But yeah, Gavin, just in terms of Solana and why it wasn't working, the Solana wallets as well. So it wasn't just the ramps, it was the wallets themselves. So we integrated a wallet called MetaKeep. And in order to open a Solana wallet, you need to pay it's a gas fee. I forget what it's called. It's essentially a gas fee for every single Solana wallet you open. And that fee is at the time that we were testing it, I think it was about 70 cents or 70 Aussie cents. And that fluctuates based on the price of Solana. So if Solana skyrockets to say $500, then the price to open a Solana wallet would be like $2 or $3. And as a business, that model in itself is that's fundamentally broken, because your customer acquisition costs just go through the roof because you're paying for every single person that's opening a wallet on the platform. Whereas with Handcash,
who's charging the fee? Is it the wallet company or somebody else?
It's the network fee. So that's essentially how the wallets work on Solana. You need to pay a fee. It's the ATA fee. Yeah, ATA. So you need to pay the fee. It's like the 80 cents is locked in a smart contract, and then you only get that money back if the wallet's closed. So yeah, there's a lot of things on the Solana network that just didn't work properly for us, which is great that we've now come back to Handcash, because obviously the wallet creation on Handcash is next to zero. Brandon,
what's the effect that makes it not work? Because if I was to buy a seat on the Solana exchange of wallets, and it was like, even if it was $3, it doesn't sound that bad, especially, if just like a seat on the stock exchange. If you sell it, who knows, maybe even get more money for it, but maybe you don't own it. I don't know. But there's got to be some reason, like, in other words, what do you think is the particulars of a customer and, say, like, Lamint relationship that makes it so that when the customer comes in, why do they say no to the $1.40 or 70 cents or $3?
Well, I think with a majority of fans, when they join a platform, if you ask them to pay a fee up front for anything, it's that barrier to entry that's going to be difficult to overcome. Like, what we realize is we've essentially got 30 seconds to onboard a fan and have them spend on the platform within signing up to wanting to access created content. Now, in its current form,
so people have never done this before with the regular internet. They're like, when you get a Gmail account, it's like the opposite. You get 15 gigabytes of free storage, and they're not asking you for $3 just to, become Gmail
Oh,
user, and that's to your benefit. So you're saying the onboarding thing is just so foreign to people that they just immediately
yeah,
think it must be some kind of scam if they're getting charged money
100%.
already.
100%. Like, it needs to be so easy. So there's an app. There's a platform that just actually got acquired by a group called FanFix. The name of the platform was Sunroom. So the way Sunroom did it, you essentially sign up to the platform. You sign up, talk 20, 25 seconds, and then you click purchase. You purchase a number of credits within the platform itself. And that process from start to finish was about 35 seconds. So from signing up to the platform, buying the credits, and then being able to spend on created content was 35 seconds. And so that's what we're competing against. Like,
That's a
within
great point.
the creator space.
That's such a great point, because if you were to walk up to a vending machine and it said like 40 cents for a can of soda, and you could wave your phone and 40 cents popped out, whether that's, especially if that's like a BSV or something, and there's no charges for that. Or even if you could just like, oh, the machine only takes BSV, but you can get a wallet really quick, and you can download $5 from, using your credit card or whatever. If it takes less than 30 seconds, you might do it. But if it doesn't, then you're like, and then someone's asking you for 70 cents or $3, you're not doing it.
Oh,
Like,
exactly. And
then
if
you're
it's
like,
costing them,
but no, now
yeah,
you're in the ecosystem, and they're like, we're not interested in the ecosystem. I just want a can of soda.
exactly. And Visa and Mastercard knows this. They know that there's a little, niche bubble of people within the cryptocurrency space that are willing to jump through 10, 15 hoops in order to acquire, some random token. But they know fundamentally that everyone outside of the cryptocurrency space is not going to do that. It's just not how the real world works.
Daniel,
And that's what we soon realized.
who gets the fee, the wallet fee in Solana? So that seems to be the person or entity that would want to get rid of it to help Solana out. So why don't they do that? Like, who gets that fee, and why do they not want to give it up?
So that fee goes into it's essentially locked on the Solana chain. So that fee's locked on the chain. The wallet's used. Once the wallet's closed down, then the fee goes back to the user or the business.
So the
like, even that in itself is ridiculous, right? That entire concept of having to open a wallet, pay the ATA fee, and then that fee can vary depending on the price of Solana, and then you only get that fee back once the wallet's closed. Like, it's ridiculous.
So either the Solana devs are the biggest dummies on the planet Earth, which is kind of hard to believe because there's a bunch of them. You'd think they'd be able to figure it out, or there's got to be some screwed up thing within Solana's protocol, software, or community that makes it so that they aren't able to get rid of that fee so easily. In other words, it's got to serve some kind of function that they're just not able to easily get rid of it. But
Yes,
it would be interesting to know what that would be. I don't know the answer, but
it's the chain itself. But what I'd like to know is from Brandon, like, how much it costs to create a Handcash wallet, because I think that's the issue with Solana, right? Because it costs, say, 0.002 of a Solana to create the wallet, whereas on BSV you might be just paying one transaction fee of 1/10,000th of a cent to create the wallet. I know Brandon's still here.
I mean, we build a wallet not even internally. We build it so that we could do certain things with Slictionary, and it doesn't cost anything. You can form a wallet. Yeah, you can form a wallet with no transactions, no money. You just literally create an account and say, well, when this person chooses to interact, then we'll generate a key. You don't need anything.
Yeah. Well, that's it, and that's the thing, right? BSV works. Everything on it works so well, which is why we've come back. But again, it's the ramps, and no one's really talking about this. But it seems like there is no solution because it's the banks It's Visa and Mastercard who are blocking this.
What about Orange Gateway? Have you tried? They have a new product out as of earlier in the fall or later summer, where they have an onboarding product. It might be slightly different than what you're talking about, but it's something you can put on your website and get change basically fiat into. In other words, now it's coming back to me. There's a certain amount of money in Iceland where if you're below that amount, they just don't care about KYC and all that. So the process becomes very quick. And I think that Hlinner at Orange Gateway has used that law to basically create a product where he doesn't, if like, so let's say you want to buy $10,000 of BSV because you want to speculate on it or whatever. You've got to go through KYC. Now, Orange Gateways is really fast. Mine took like a half a day or something, where I could go from like not having anything to do with Orange Gateway to actually getting some BSV. But that was like a year and a half ago, and that still works, of course. But that's more of the exchange product. But he built something where if you just need $100 of BSV because you want to buy, something on Slictionary, or you want to, pay people on Lamint, you can get it. But I don't know if you've looked into it, but it's basically like a button of some sort.
Yeah, we have because they were the traditional on ramps that they integrated, which were awesome. Which again, they worked some of the time, but not all the time, because the payments are still classified under that banking code, the MCC 6414, which is cryptocurrency payments. So some of the time they worked with the on ramps, but then other times they didn't.
So they actually recreated the coin flow thing, but for BSV is what you're saying. But it turns out coin flow doesn't really work very often either, so it's kind of touch or go.
So coin flow works with the digital goods payments, which is MCC 5815. But for the cryptocurrency payments, like cryptocurrency on ramps, it still doesn't work properly.
So why can't you just use it for the digital currency thing payments? I'm sorry, the goods payments, Daniel. I thought that was the plan. Was that not
the plan? Yeah, that was the plan.
But is that just too much of a risk, or what was the reason?
So there was two things. There was those individual payments. So everything needed to be a one-off payment. So say in our case, if you were to purchase creator content, there was $1, then you could do it and be classified as a digital good, but then you'd pay that small fee. Also, with CoinFlow, the way they've set it up with the digital goods, you had to receive something if you were making the purchase. So, for example, like a digital good or an NFT, if you were to make the purchase. So in our case, if you were to tip a creator, say 20 cents or 50 cents, you again had to receive something in return, which isn't the case, right? So it was essentially, it only really works for NFTs. So when you're buying something from a creator, it could be an NFT, or it could be a token. As a fan, you had to receive something on the seller's end for it to be classified as digital goods.
Yeah, it's the same thing on Apple. I mean, I developed an app in 2019 and 2020 on iOS, which took BSV. But the problem is, if you're not a straight up wallet, the iOS app reviewers will take away your app, and that's not the worst of it. That I could have dealt with, but I knew that any time that I push my app up, I could probably get it through review. In fact, I did get it through review initially when it was in its beta stage. This is before Slictionary was a different app, but I knew that if my business were to actually do well, then it would sort of kind of alert them to kind of check you out on a certain more increased time frame. And if they find that you're actually selling something, information or whatever, and it's not just straight up wallet operations or exchange operations, then they not only shut you down, but then you have a black mark on. So then anytime after that you try and put an app up, they're like, oh, this guy, you're at the back of the queue. They give you no time at all, and they might just outright reject everything that even looks slightly, even if you make a small bug or something, then they'll reject it. And I think Handcash has probably gone through this themselves, because they've started off as a wallet, but they do other things too. But it's just interesting that once you get into the real world of payments, somehow the snake or octopus, or what do they call Goldman Sachs, the killer squid or whatever of MasterCard, finds you and shuts you down before you become a problem.
Pretty much.
Well, look, you've got the problem of chargebacks as well on with your traditional payments, and I think that's what happened with Thor on Orange Gateway. There were a bunch of chargebacks that went through, so their license was either revoked or suspended temporarily for the on-ramps, which is going to be something hard to battle with the BTCers, because they can just call their banks multiple times and say, look, this payment was fraudulent, and so that goes as a chargeback on that business's payments account. And if you hit with a number of chargebacks, too many or a certain percentage,
you're only at 2.5%. If you get a 2.5%, you're shut down. Your account is closed. You're done. Yeah. So it's not. It's a very small threshold.
So to be honest, I think it was a bad actor within the BTC space, creating all these different chargebacks for Orange Gateway, and unfortunately, they had their on ramps revoked. It's
which is funny because that's now full circle, because chargebacks is literally like first two paragraphs in the Bitcoin white paper. I mean,
exactly.
Craig formed. Satoshi formed Bitcoin because of the chargebacks. I mean, that's literally what the whole first two paragraphs is about. Like, and I know this because I used to own a company in the gambling space called NetTeller, and it was a wallet. And I'm talking 2004, I think, is when I first invested in this company. I thought it was the greatest company. I literally thought NetTeller was going to own the world because they had built a wallet where you could move money in and out of casinos and you didn't get charged any fees, and it was just amazing stuff. Now, it was basically just dollars, but it was essentially like a like what people think of as stable coins now. But and the whole reason for its existence was you couldn't charge it back. So in other words, the net teller and the casinos or the sports books and everything had control. And so once you made your $1,000 Super Bowl bet or World Cup bet, and then you call up the company, the sports book, to get your money back. Oh, that wasn't me. That was somebody must have hacked my phone. And that's what causes the fee to be so high for Visa and Mastercard payments is those chargebacks, and it costs a lot of customer service. It's just interesting that you mentioned chargebacks, because it just makes me think full circle that this whole thing's been going on for 20 years, and yet we're still doing the same stupid thing. But now it's not so much the solution's there. It's been created, but now they don't want it because they know that it means that MasterCard's disintermediated.
Yeah, exactly. So I don't know.
Let's go to Brandon. He's got his hand up, Daniel. Brandon from Handcash wants to chime in.
Awesome.
Hey, yeah, I was just looking into the bank's integration. So it's not going to support BSV off the bat, but it will support MNEE on BSV off the bat. And the interesting thing about this integration is they accept ACH payments. You can do like a standard bank transfer instead of having to rely on MasterCard and Visa. So that'll be interesting to see how that plays out.
Okay. Awesome. Yeah, I'm still trying to wrap my head around Money's business model, because every single other stablecoin will receive a percentage of top-ups, so essentially on-ramps and off-ramps. So if you use Banxa and you top up $10, then Money will receive a certain percentage of that. So it's 5%. So Money will,
it's the business model.
Money is in MNEE.
Well,
So
any stablecoin's business model is incredibly simple. They're just doing what modern banks are doing, but even better, because they just take your money, your cash, they invest it in T-bills at 4.5%, and you get the funny money, and they get the 4.5%. So like Tether's just crushing it right now because all the pirates that have their money in Tether, of which there's almost 200 billion. Well, think about 200 billion at 4.5%. I mean, they're making 9 billion a year, just sitting around doing nothing. It's the world's greatest banking model. So, I mean, the banks are doing this now because the banks don't really technically loan much money anymore. So they're just taking your money, giving you a 0% checking account, and then they take your checking money and they put it into the T-bills, and they're just laughing all the way to the bank. So the world's become a little bit jaded that way, but it's even more jaded for the stable coins. I mean, if you can get the stable coin business any way, shape, or form, it's the greatest business model in the world. You're just collecting money for doing nothing. I mean, you sure, you got a little tiny software platform that moves digital currency around, but everybody knows that's cheap. So if you can earn, someone puts $1,000 into your stable coin, and you can earn their interest just by having it sit as a number in a database. I mean, geez, that's like 99.999% gross profit margins.
Yeah. The way that USDC and USDT also make money through these ramp services, they earn a percentage of the top up amount, which is what I'm hoping Money will do. Instead of charging 0.0, I think it's 0.001 cents or 0.01 cents, 0.01 cents on every transaction, which doesn't make sense, given that the BSV network fees are 1/10,000th of a cent. I'm hoping they change their model, to be honest, and just take a percentage of the bank. So in this case, with Handcash, they just take a percentage of the bank's on ramp and the percentage of the bank's off ramp, and that's it. But look, we'll see what they do.
Well, the other thing is, it sounds like the real problem for something like Lamint wouldn't be the onboarding. So you might get someone willing to pay $1.50 for some token or some exchange of some sort with a content creator, but then the content creator builds all that up, and he's got, I don't know, let's say $500,000 collected up, and now he wants to turn it into cash. So when you off ramp, how do you think that's different from the on ramping? Maybe it's actually easier. I don't know.
Off ramp is always easier. So off ramp is not the problem because the banks aren't flagging it. Sometimes they're not flagging it, to be honest. MoonPay sometimes flag the off ramps as well, but off ramping is a lot easier for creators, because if you're a creator and you've earned $500,000, you're more than willing to jump through 10, 15 hoops in order to withdraw those funds. So you're happy to send them into an exchange, to say convert them into a stablecoin or whatever, and withdraw those funds back to your bank account. Whereas the fan side that we need to navigate properly, because the fans are the ones that you need to get onto the platform, under a minute, and that's the on ramp problem. Off ramps is fine. If off ramps is complicated, that's not an issue. That's what with our business model, that is. It might vary.
It's pretty interesting from my standpoint. It's kind of a light bulb going off in my head as I listen to this and think about your company, but also another company I know that it actually has a Solana wallet on their mainly what started off as BSV only app. And this company, I was like, man, I would have sworn the Solana usage would just ramp right up because the product's good. Product's great. And but nobody's on there. Like, in other words, it should just be a no-brainer that Solana people would use this thing. But that just tells me that like, given what you're telling me, Group A is Solana users that already have Solana and they don't want to spend it. There's a bunch of hodlers waiting for their number to go up. There's not a chance in hell that they're spending that money, so they're not interested. And then Group B is people who could use Solana to sign up, but that means that they're in the same group as us trying to sign, like BSV apps trying to sign people, which is mean you're trying to get them fresh. And Solana's no better at that. In fact, they're worse at it because there's way more BSV people on this app than there are Solana people. Which I would have bet a lot of money on little bit in a prediction market to say, oh my God, the Solana is totally going to work out because there's just such a much bigger community. There's like $100 billion there, and like all the Wall Streeters all think Solana is the bee's knees and all this stuff. But it just cryptocurrency as a system. They actually aren't interested in the apps, and they don't really want to. They don't really understand what we understand. So it's interesting. There has to be an app out there that comes out that is just so compelling and can do things that only BSV or Bitcoin can do, that makes people go, oh. And it seems like some of those things are obvious, right? Like writing an article and being able to charge 5 cents for it rather than trying to goad people into a $6.99 subscription.
Yeah,
I mean, even Elon Musk has talked about that. But there's plenty of other examples. I think it's a shame people come into BSV. They make some of these products. I remember one of them was Palping, and it was basically like a great social app where you could write articles, sort of like Medium. And it was a great app. Like right off the bat, he did pretty well. He just needed to improve it a little bit, and it didn't work in 3 months, so we left. And it was like, geez, he didn't even really try. But like, I feel like it's a shame because people, even the devs that come in, they want to make money fast, and when it doesn't happen, they just leave. So it comes down to me just thinking it really has to be garage bands. Like if you're a builder, you have to just be like, this is my hobby. I don't give a shit. Yeah, I'm going to pay maybe $20 a month in fees for hosting and all that stuff. And you just take the risk and be like, I just love this shit. And I'll sign, people up in small niches or whatever, and find your way. It's just gonna have to be slow but sure.
And Daniel, what's your pitch on why you think it's going to be the creator economy that's going to be the robust app?
So what we realized at the very beginning, we thought, all right, who are the best marketers in the world? And everyone in BTC thinks it's, Michael Saylor or Wall Street or, all that talking about BSV, but it's not. The internet's best marketers are the content creators and influencers. So if you can create a product and a tool for them that helps them earn more money than any other tool on the internet, that's how you get BSV to win the entire cryptocurrency race. But what we're now thinking about as well, how can we incentivize fans to also use the platform beyond content being cheap? Because that's a positive, but it needs to be more than that as well. So that's where this token system comes into play. And it'd be awesome to have a chat with Bose again in regards to
we got to brainstorm on this. We got to brainstorm on this token system. Let me go to Old Craig. He's got his hand up while you're chiming in. Old Craig.
Yeah, so I think it's a great point that the creators are the greatest marketers. I hadn't considered it that way, and I think there's I totally agree that the creator economy is a way that is going to be one of the first or main adaptations or use cases for BSV or Bitcoin or crypto or whatever. But you said the creators, they want to make money, and they want to make money. People have crypto token fatigue. And for BSV, it's like toxic to talk about. But you talk to the average creator and you tell them, oh, you can earn these tokens and all these things, and it's like they just want to make money, man. They just they just want something they can pay the rent on their expensive condo payment for their creator house or whatever, you know, they're doing. They just want to make money. And I think that all of the, you know, stable coins, it's like that's very tangibly money. And Jack, I hadn't considered the business model until you pointed out. It's like so obvious that they're just printing money. It's like it's all margin. I saw a stat the other day saying that Tether was the most profitable company per employee in the history of humanity. So the stable coins being a business and being available, like money, that will kind of take MNEE, that'll kind of take care of itself, I think. And if you can bring creators to a platform and say, hey, we're going to pay you in essentially dollars, that I think the on-ramps and off-ramps, leave that to the guys that are the companies that want to handle that kind of stuff, because they're going to make a lot of money doing it, I think. I think MNEE is just growing, and I'm sure there'll be others. And then if you can get the creators there by saying, hey, we'll pay you, it might take paying them up front. I don't know if you need a big capital infusion to pay them to bring them over, like Rumble has done. And I have all kinds of, you know, Rumble's enabling crypto payments allegedly. I don't know. I have all kinds of problems with Rumble. I think they fake their views and are shady in a lot of ways. But, you know, you get that, you're paying creators to be there, and then they start to use whatever it is, if it's tokens or something else, you know, all the KYC stuff, that I think it would be cool if you could just circumvent that and be like, okay, well, we're going to note the wallets that pay you, and then when someone else pays you for a like or pays you for your content, we'll just send you direct peer-to-peer part of that payment from user A to user B, and also most of it to the creator, kind of like Twitch used to do. And maybe I'm out of my depth there on how all that works. I don't know. But I think the way to get people to use it is get the creators over that people already want to see. They're great marketers. They can bring them over. And if you can show them that, hey, for every like, you're getting a penny or whatever it is, we're not taking, you know, you have to deal with advertising, you have to deal with all this mumbo jumbo. It makes it such a better experience for the creator. I think that could be one of the keys. Just let the MNEE guys and all those guys take care of all the KYC and all that in the onboarding. It's like you're getting dollars. That's what people want. They want dollars. So I don't know. Just some thoughts. Thought I'd throw that in there.
For sure. Yeah, like legally, we are required to KYC all the creators who are posting content on the platform.
Yeah, for sure.
But then again, like it comes down to, like, if you're a creator outside of the Bitcoin space or the cryptocurrency space, and say you've got a fan base of 100,000, and then you invite all those fans to the platform, say 1% convert, say 1,000 come onto the platform, and then all of a sudden they're asked to top up their wallet with either money or with BSV, and then the banks flag that payment. Yeah, they're gone. They've left the platform. They're likely not to come back a second time to try again. So it's getting over that hurdle. We start to appeal to creators outside of the cryptocurrency space as opposed to creators within the cryptocurrency space.
Yeah.
And getting over the hurdle of top-ups and being able to get on?
Then top-ups, yeah.
Gotcha.
You know, you essentially can't have a regular content creator come on and invite their fan base onto the platform, because if those fans come from a world outside of cryptocurrency, it's just far too complex. Like, I think we've been in the space for like 12, 13 years now. So, you know, posting a public address is second nature, or, you know, navigating an exchange is second nature. But trying to do that again, like as a new fan outside of cryptocurrency, it's next to impossible, to be honest.
Yeah. So we just need reliable on-ramps, and I don't know, is Lamint trying to do that itself, or are you going to rely on someone like Handcash or something like that to do that? Because I feel like that's their core competency, is to let them handle that.
Yeah. So we originally attempted to do this ourselves, but even the on-ramp provider that Brandon's talking about, Bankster. So we've tested those services as well, and unfortunately, a lot of the payments are flagged by the banks. So we're going to kind of rely on Handcash to integrate those services, but knowing that they're going to be semi-fundamentally broken for us, But at the same time, I'm not sure if you heard beforehand, Craig, we're aiming to create a hybrid version of Lamint, where we both have the cryptocurrency aspect, but then also the fiat aspect. Because with fiat on-ramps, it works. They work seamlessly. We can do an internal credit system as well within the platform. We just build our own internal ledger, reconcile that at the end of the week, pay the creators. But then we want, as part of that, we want the creators to also be able to earn in BSV if they choose to. So you've got two aspects of the platform. One, with the ramps that work seamlessly, and then two, with the BSV payments that you can earn. But again, it's going to be harder to introduce fans on the BSV side as opposed to your regular fans who can top up seamlessly with the traditional payment rails. Banking as a service, essentially.
Will that be credits, Daniel? Like, would that be like localized credits, and then once you spend them, they turn into crypto or something?
No, so they won't turn into credits. Sorry, they won't turn into crypto. We can still denominate them as dollars. So essentially, they will convert into credits in the background, but they will look like dollars. So you would say let's just say you've got a second wallet to the Handcash wallet within the platform. You top it up with $100, and then you can spend those $100 on content creator posts and photos, whatever it is. But then, yeah, on our side as a business, there's just a bit more kind of work on the accounting side, because then we need to consolidate those payments and reconcile them at the end of each week, and then pay the creators their earnings.
Could you
Nice.
could you pay the creators in like Bitcoin or stablecoin or whatever? Would you have to do like a bank transfer to the creators?
What we propose to do is pay them to their bank account. So just regular payments. Because our main target audience at the moment is people outside of the cryptocurrency space. Well, particularly once we set up these traditional fiat payments. But for the time being, now that we're back on BSV, it's people within the BSV space or within the cryptocurrency space.
Okay, let's go to Matt Welsh. He's got his hand up, and then we'll go to Block Fictional. Go ahead, Matt. What's up, bud?
Hey, thanks, Gavin. When this comes up, it always kind of ignites the dragon or the fire within, because creator tokens and just focusing on creators to me is the absolute no-brainer thing that needs to be prioritized. And thank you to Daniel for doing that, and even Tree Chat for also kind of going in that direction. But like I first discovered this concept once again from Jack Liu at Cambrian SV. This was 2022 in Costa Rica, and he also was kind of piggybacking off of the Friendtech case study. And the whole thing was just like, yeah, like, it felt like God was speaking to me, like, dude, like, this is why your music is not top 40, and, you're not selling out stadiums and touring big, like, kind of like I used to was doing, because I hit a plateau in my music career. Like, I was in 4 bands that, from the Northeast, like Jersey, Philly, New York City, and we crushed it. I mean, like, we had the lead singer from Census Fail managing the band. We opened for the Wonder Years on multiple times. He was booking for us. I mean, things were about to blow up, and then I just hit a plateau, because like what I've always done in all my bands and currently now in my music is like, speak to authenticity and like actually, show up with real musicianship and not like synthesizers and digital production and things like that. So I've just been like stuck, like I had that big aha moment at Cambrian SV where I'm like, oh, that's why things haven't taken off, because I was supposed to discover that Bitcoin was the answer that I was waiting for. It's what I built up to, like whole discography, album after album, like then I wrote a book, and now I put together a festival, where I'll be selling tickets. So all of these things, like, they're never going to succeed if they're not done on chain in a way that's censorship resistant and profitable, because all of the payment processor fees and just censorship in general with deplatforming and debanking is a real threat to an artist that actually speaks the truth and shares it through art, which in my opinion is the most powerful medium to actually make a difference. That's what Hollywood or Hollywood is with the spell casting. Like they use cinema, film, and audio and sound frequency to basically do their bidding of psychological warfare, and the only way to compete with that and the money system and the banking that supports it is Bitcoin. So yeah, this really just ignites my soul. The creator, I mean, I don't know, like if any one of like the 4 potential angel investors that I pitched my roadmap to, and obviously were well acquainted with my body of work, had gone for it, I don't think we'd be having this conversation right now. I think Lamint would have way more traction, and people would be already making more money, and these case studies would be circulating. You know what I mean? So like the big issue that I found is 2 things. It's like the actual price performance of BSV has made it very hard for actual BSV whales that get it to have the confidence to take a risk on a venture, on an on-chain venture. And then the other thing is anyone with deep pockets that's real savvy in finance and business in general is very skeptical when they see BTC sitting at what was $100,000. They see that they made money from it, and then here I am talking about all the things that we've been talking about, and they're just like, I see it, I get it, but I'm skeptical. And again, how does this make money? Where's the ROI? So, outside of the enterprise adoption arena of this network, like I feel like this year is the tribe and the community that actually can put a focus on what we can do, and maybe it's what we should do, and that's focus on helping ourselves. How do we as artists and creators and personal brands actually, have the platform and the tools to really monetize in a way that's sustainable? Because I'm still stuck. I don't have the tools. I want to build them out, but until they're in place, I'm just not like amped to be putting out new songs and music videos that cost a lot of money to produce and marketing and doing all this content and
All right,
advertising.
let's bring it back. Let's bring it back here, Matt. I'm going to thank you. That's really good, my man.
Yeah, that's my 2 cents. Thanks.
Awesome. Gavin. Let's go to Blocked Fictional. You're up now, buddy.
Hi, everyone. Thanks, Gavin, for hosting a space.
You're welcome.
And for your resilience and consistency with the spaces. It's really, you're slowly becoming a main channel for BSV, and I think that's great. I really enjoyed the conversation so far. I want to ask Daniel a couple of questions, if possible, max 3, if I may.
Daniel?
Sure. Yep. Yeah, go for it.
Yes. So I was. I'm not sure if it's been mentioned already, but in regards to on-ramping and off-ramping, especially the users, so not the content creators, but the fans. Have you considered something like a reserve in USD, meaning like they interact with BSV? When they want to get out, they just swap to cash, but you are the issuer of the. Basically, you just make a bank-to-bank transaction from your bank to their bank, or from your bank account to their bank account. So it would, of course, mean that you have a lot of a reserve in USD available to then transact. But is that something you've considered?
Yeah, it all comes down to the licenses, because we looked into that as well. And as soon as we're handling funds like that, we become a money transmitter. So we need our money transmitting license, and it's just there's a ton of, 1, money involved, and then 2, multiple licenses if we're handling the funds in that way. as opposed to relying on a third party to do this for us.
So you're saying that? Sorry, go on.
I was going to say as well, like even if using a third party as a treasury, if they had a service similar, all the fans would need to KYC as well if they were to use this service. So not just the creators using this, not just the creators KYCing, the fans as well. Again,
that would be the fans. That would be the fans that want USD, right? Or
correct. Yeah, like, well, if they wanted to stay